Our market master today is IIFL's co-founder and CIO, Anup Maheshwari. And he's here because I want to discuss 4 specific themes with him. 1, why is equity a great asset class in India? 2, financials, are they likely to have a long, great innings in the equity market? And he argues, yes. Why is IT a compelling investment? And if possible, the 4th theme, PLI themes. But Anup, good morning and thank you very much for coming to our studio. Let me start straight away with financials because everybody is heavy on financials. But there is, last 3 weeks we have seen things recede a bit and there will always be self-doubt whether, we should continue to be so heavy on banks. But you tell us what are your reasons, and you say you have compelling reasons to stay in financials.
Yeah, I mean, there are 2 ways to look at this, Lata. One is the here and now, and the other is just to put in perspective in terms of a journey over time. Let me just give you the second part first, which is, if you look at financials, over time we've seen within bank balance sheets, consumer lending is becoming a bigger proportion versus corporate lending. And if you just think about where India is in the consumer lending journey, we've come a long way in the last 10 years, but there's still a long way to go. If you look at, 10 years ago, the total retail borrowing as a proportion of GDP in our country was about 10% of GDP.
Yes.
Just to put in perspective, globally, when you look at retail credit to GDP ratios across the world, in most emerging markets, that ratio is anywhere between 30 to 50%. Okay. In most developed markets, it's between 50 to 100%. From 10% 10 years ago, we've come to about 20% today, but we're way below all averages. And what we've seen is consistently when per capita income rises, retail credit to GDP rises. Nice. So our thesis is that by the end of this decade, we'll get to 30% of retail credit to GDP. And this credit would be more dispersed across the population rather than it being concentrated only at the top tier, which is where most of today's credit goes. So it's a very interesting situation where credit growth is not only occurring, but it's occurring in a more distributed way, which will build overall per capita income rather than it getting concentrated only into the top 10 or 15 households. Our calculation suggests that the top 12% homes get 70% of India's retail credit today. So banks have really only touched the top end. But as they go further down, I think there's a lot of potential.
Yeah, I agree with you. It'll be top, only 70% hogging the credit because at the moment, largely it's only the salaried class that is touched. So the EPFO numbers have perhaps been attended to, but not. But where will the mojo lie? Will it continue with private sector banks? Or do you think NBFCs, at the moment, NBFCs are so secondary to private banks or banks in general simply because the cost of money is much lower. Yeah. Do you think the mojo will be with private banks or?
So everyone has a role to play, honestly. I don't think it's just one versus the other. Over time, of course, private banks have shown the ability to increase market share relative to, let's say, public sector banks or NBFCs. But I think the key really in the longer run is to have a good liability and asset franchise together. And that's what's been supporting private banks. But all will exist because NBFCs have their own skill. And especially as you go down the population curve in income levels into tier 2, tier 3 and beyond, we call it India 2, India 3.
Yes.
The role of NBFCs is pretty important because they're able to reach out.
They have the last mile reach.
Exactly.
Much better.
And public sector banks are also important to the extent that a lot of deposit franchise comes for them from those areas.
Okay, okay. Point taken, but let me just add a quick, here and now question. Do you think that, the current situation, in the current situation, NBFCs have a problem? I'm just asking you a recent question because in everybody's mind, the way Bajaj Finance fell after it just announcing its numbers created a bit of a flutter. Is it that urban consumption has slowed now? And for the next 2 or 3 quarters, that might tell on everything, not just on consumer goods, on all stocks. What's the cause behind this sudden fall?
Yeah. So for Bajaj Finance, I think it wouldn't be fair to put the whole NBFC sector in the same bucket. Bajaj Finance obviously has been the best NBFC so far. And I think there are 2 currents here. One is the sector itself. The other is this general trend where more richly valued companies are generally, their valuations in
Are being
today's
brought
day and
down.
age are just a little more sensitive to any earnings
Okay.
disturbance. And it's a great company, continues to grow, etc. But I think those are it's more a function of the type of market we're in. But NBFCs generally, our thought actually is that they've got a pretty decent time ahead of them. After all the trouble post 2018 to now, I think most NBFCs have reached a point, at least the ones that have managed to make it through, wherein balance sheets are a lot better.
Yes.
I think there is some confidence lending. You'll start seeing that incremental change coming through. And they've somehow managed their deposit franchise. It's not gone crazy yet.
Yeah.
So I think NBFCs also, and they're very reasonably priced now, a larger part of
Yes.
that segment.
And a newer crop of founders also. I mean, promoters like Poonawalla, Fincorp, Piramal. There are a new set of founders also who have come in. Take your point on that. But you're not worried about urban consumption. Is that something, a message that you got in the third quarter advance numbers?
Not really. I mean, you'll have these few quarters here and there. I think you've got to still look at the longer trend.
Okay.
And I think, as I said, penetration is still too low to worry about these type of issues yet.
Okay, let me come to the other big theme that you discuss, IT. IT is not the flavor of the day.
Sure.
But you have kept the faith, as I can see in your focused equity fund. What's your thesis there?
So just to clarify, I mean, we are slightly underweight relative to the index right now. Again, a great bunch of companies, but we do see the immediate challenges ahead of them. The way we see it is, valuations have to normalize ideally. And most IT companies are maybe 10 to 15% above long-term averages still. So maybe we need a bit of a time play out for this. The commentary is the same, which is, worried about spending with the US recession, etc. But our sense is it is a 10% growth sector, beyond all of this thought.
Okay.
And if valuations come down, again, it's a sector definitely worth looking into.
Okay.
But the focus would be on the more larger caps this time around.
Okay. Any reason why?
Well, so a lot of the mid caps benefited in the course of the last 2 years when people were just desperate to do cloud migration.
Yeah.
Companies are willing to give contracts to everybody. Now we're going through, having done all the migration bit, now is the actual transformation. It's very easy to just do the migration, but the transformation tends to vest largely with the larger firms.
So the men from the boys would be seen.
They would tend to have a better business outcome.
Okay. Time permitting, I'll come back to wedding the IT and the finance theme. But PLI, which of them give you confidence? I mean, there's one school of thought which says that, it's very good to have incentives in manufacturing, but other ASEAN and North Asian countries can also give tax incentives. That's not a big deal. We don't have still the matching infrastructure to make a mark. But which PLI sectors attract you?
I think it's across the board. Again, Lata, what we really like about the scheme is they keep announcing new areas as well, incrementally. And, it's something that, not just the PLI scheme, as you correctly mentioned. I think there's again a broader trend where people are preferring to outsource from India now.
Yes.
And it's a trend that to our mind has become a bit irreversible. We've had many start-stops in the past. I think this time it's clearly visible to us that it will be of a medium to long-term duration. And this will be across sectors. Right now, one of the biggest areas of investments going on the export side is in specialty chemicals.
Yes.
I think that's a big area of capital investment right now. But from a PLI point of view, I think a lot of these consumer goods that we've been importing, we will now become a source of potential exports. You'll have other areas in hardware, telecom, at some point pharmaceuticals, etc., manufactured exports, industrial goods, just auto components. I mean, it's a long list.
Yes.
But the fact is, I think it's not just the incentive, it's the broader trend that's also supportive for the money going into the ground.
Okay. One more current question. We obviously were the outperformers of 2022, as your note to investors also points out. A 4% gain year on year for the Nifty index, where most other matching indexes actually were down about 20%. Now, that's not the story from December onwards, or more particularly mid-December onwards. Why do you think that this underperformance, is it all a China issue? that China is opening up and therefore people are going there? Or is there something else we have to worry about? And this is a near-term question.
No, there's no doubt, Lata, that over the course of last year, India's relative performance and relative valuation, more importantly, compared to the rest of the world, has moved to a much, much higher gap than the past. And we would expect some normalization. You know, you can't be 2+ standard deviations above broader valuations. So we're seeing, I mean, China having got hit down dramatically, bouncing back. And we're seeing clearly from flows as well. Markets like Japan, Korea, Taiwan, China are seeing more positive flows. India's seeing a bit of a negative flow scenario right now. And this is very natural. Frankly, I think valuations adjustments have to happen.
It's just that.
I think so. You know, from a global investment standpoint, there are multiple options. When other markets get too cheap at a price, everything.
And nothing in the earlier earnings announcements. I mean, full earnings haven't come, but advanced numbers have come. Nothing in that worries you that. Or is it a debt being a pull?
No, so from an earnings standpoint, I think there will be some downgrades. Frankly, we're looking at this quarter, next quarter being, you know, a little softer than what maybe markets expecting. And then as we go into next year, and then of course you have an election year, I think things will slowly pick up again. But earnings are slightly soft. So there's that aspect, plus the markets are above average. India is one of the few markets in the world trading above average, long-term averages. Most markets are below. And therefore, there's a bit of this relative thing. So a good outcome, in our opinion, would be more of the same of last year from an Indian market perspective, which is a consolidation type of thing, with a bit of readjustment of valuations of businesses within the market. And that's good, because that ensures the longer-term journey is more secular. You don't want a market moving up too fast and then creating a bigger downdraft later on because it's just so overvalued.
Okay. One, let me play to the gallery. Your overweights are industrials, financials, and consumer cyclicals. I mean, from what I could get. And energy, consumer defensives, and technology are not your, I mean, are your underweights. Give me one sector for 23 which you think could be a standout.
Well, on a relative basis, as I said, markets, frankly, we're expecting it to consolidate a bit. So I don't think anything does dramatically better. But I still think, you know, in the first half of the year, financials will still probably do better. Okay. So financials, pharma is the, I can't say whether it works this year or not, but that's becoming more interesting for us just because of valuations there. Industrials, cement could be another interesting area. And generally, I think what we have to remember is as we go towards the end of this year, there will be a lot more focus on the elections. And typically 6 months prior to an election, you tend to start beginning to see a bit of an uptrend. So we'll wait and watch.
Okay. All right, and we'll get you thereafter to discuss those themes. Thank you very much, Anup Maheshwari, for discussing the medium-term themes that we should concentrate on when we look at equities. Wrap up on Bazaar, Chartbusters up next.